Well, joining me to put the day's markets into perspective is Anthea Gardner from Cartesian Capital. Thank you so much for your time, Anthea. Of course, locally, we are digesting the South African Reserve Bank's latest interest rates decision, and they decided to keep rates on hold. Not surprising at all. But were you surprised by all the MPC members actually deciding to keep rates on hold at this meeting? Or not?
Hi, Zanati. So the keeping rates on hold was very much expected by the markets, and even yesterday, or even this morning, the FRA curve was indicating that rates wouldn't change, except that maybe we'd have a rate cut in 5 months' time. I, on the other hand, was a bit surprised. The Reserve Bank, the MPC, have been so hawkish of late. You'd think that a 5.9% CPI headline number would give them reason to increase rates without too much backlash, right?
Yeah.
Because their target is 4.5. And I think what's interesting is that the Reserve Bank, the way they do it, right? So they target headline inflation, but they look at core inflation to see where it's going. Yeah. And the governor definitely said that. He said it's about the trajectory. It's about looking through the shocks. And so they are still predicting that we'll come into the 4.5% range within the year, I think it was. So I can see why they kept it on hold, and Merry Christmas, South Africa.
Yeah, of course. I mean, a sigh of relief, but I mean, maybe not too much relief because monetary policy still is in restrictive territory. So we'll see what the trajectory looks like next year. Let's go into company news. Mr. Price came out with its interim results today, seeing that it was the same trend as TFG, great top line growth. But then as you went down to the bottom line, you saw some of that growth disappearing. So saying that their bottom line, they're shrinking. What was interesting is that without Studio 88, just talking about that revenue would have grown just 3.5%. So really emphasizing that that is a good acquisition. The markets also did react quite positively to it. So just frame that for us, that performance and also the market reaction.
So certainly revenue accretive, but maybe not as earnings accretive as you would think, right? So revenue grew by 26%, but HEPS was down 9%. In fact, both HEPS and diluted HEPS was down over 9%. And so without Studio 88, it would have been an absolute disaster. And I'm intrigued to see the market pushing the share price so high. But I think it's about expectation. So what was the market expecting? Because there's really not a lot of good news in the story, is there?
Yeah.
You saw cash sales grow by quite a phenomenal 88%, and then credit sales only 3%. And I think this is a good move, actually, by Mr. Price. I think they understand that the consumer's under pressure and they don't really want to take the credit risk as well as fashion or stock risk.
Yeah.
So maybe that's what the market's seeing and really liking. They still have plans to grow as well. They're approximating another 140 new stores. They want to grow that Mr. Price Kids brand. So maybe I think maybe the market's looking through this horrible HEPS number.
All right. And of course, just looking at Studio 88, of course, they do say that earnings there tend to be weighted towards the second half. So we'll see what their full year results look like in a few months' time. Let's go into another retailer, food this time, Spar. It released its annual trading statement saying that it got a 1.4 billion rand hit to operating profit, and in turn they expect headline earnings per share to about halve. Investors did react with selling on that front. Just talk to us about the headwinds and the impact on the balance sheet.
Sure. So there were probably 4 or 5 headwinds, problems with this that the investors didn't like. So firstly, they had an unsuccessful launch of their new SAPS system at the KZN DC. Then they had impairments of 120 million rand in the Irish business regarding their on-site meat processing. The sale of Poland, also they had to write down goodwill of goodwill and assets amounting to 440 million rand. And it kind of just keeps going,
Yeah.
Turnover growth of below, inflationary costs. So it's been a really tough time for SPAR.
All right. Well, Anthea, before we get to your stock pick, let's go to Cal. And as you're talking about costs, Cal, another company that said that it was hit by load shedding costs quite a lot, saying that it ate into its pie. So releasing annual results, their revenue up 42.7%, but that recurring headline earnings print just up 7.2%. What did you make of that performance there?
So I still call it carp ugly. I'm clearly old. But again, decent revenue numbers, and then again, the bottom line not so great. They really have been hit by pretty much the same things, load shedding, and of course, adverse weather, which I'm not sure is going to get any better considering the El Nino that we're expecting, and you would have heard the governor talk about that as well. Also, higher interest rates. They did get some they did get some relief, they had higher margins in their convenience retail stores and in fact better margins in their general retail. So you can only hope that they will manage that properly and that this El Nino won't be too terrible an effect on them.
All right. Well, let's get to your stock pick for today, Anthea. What are you hanging your hat on?
I'm going with new broom sweep clean. I think that Jason Quinn's got his work cut out for him. I've been listening to the chairman talk about perform and transform as his key goals. We're buying it. At their last results, HEPS was up by 10%, that 14% revenue growth. They've got some exposure in Africa, but they're also looking to, I think the word they used was rejig their wealth business and grow their market share in Africa. And they made a point of saying that they're not chasing other banks who are already in Africa. But I think, the combination of the chair and the new CEO is a good one. And I think they're going to make it happen.
All right. Well, thank you so much for your time and giving us your analysis on what has been driving our money today. Anthea, really appreciate it. That was Anthea Gardner from Cartesian Capital.